Tether's Q1 numbers really caught my eye, posting a cool $1 billion in operating profit and holding $5.6 billion in excess reserves. It's interesting
Exactly.
how this marks the lowest reserve level since Q2 2024.
Right. And what's striking is that even with the drop in reserves from $7.1 billion last quarter, the exposure to US Treasuries remains staggering, nearly $120 billion in total. Isn't that something?
Absolutely. And dig this. Within that, there's $98.5 billion in direct US Treasury bills, and then an extra over $23 billion is tied up in repurchase agreements and other cash equivalent assets.
Yeah,
It
that's
really
huge.
shows how Tether's positioning its assets.
And speaking of positioning, did you notice the strategic investments they're making? Over $2 billion allocated in renewable energy, artificial intelligence, peer to peer communications, and data infrastructure. That's quite a diversified portfolio for a stablecoin issuer.
Yeah, it's like Tether is hedging its bets, right? While still maintaining that impressive market cap of USDT at $149 billion, they're clearly investing in trends that might shape future financial landscapes.
Exactly. But here's a twist I was pondering. Tether's circulating supply grew by about $7 billion in Q1, plus they added 46 million new user wallets. Is this just organic growth, or are there other factors at play?
That's a good point. It could be a mix of organic demand and market reassurance in times of crypto uncertainty. You might say it's both trust and utility driving adoption.
Right, absolutely. Now there's also the broader stablecoin market angle. With USDT and Circle's USDC holding a combined 87% of the market share, there's a lot riding on these players. What do you think that means for market stability?
It's a double edged sword. On one hand, having dominant players can lend stability, but on the other, there's risk if any of them falter, especially since the US Treasury's Q1 report hints that the market could hit a $2 trillion cap for dollar backed stablecoins by 2028.
Yeah, that's a massive projection. Right, and then you have EU officials sounding alarms about an over reliance on dollar pegged stablecoins. The Bank of Italy even mentioned that disruptions here could ripple out into the global financial system. Do you think those concerns are warranted?
Well, it's definitely a valid concern. Imagine the system like a finely tuned watch. If one gear slips, it can affect the whole mechanism. Sure, Tether's numbers are robust now, but if there's a bond or market disruption, those excess reserves might not be enough to cushion the blow.
Fair point. I do wonder though, isn't it a bit of a gamble that Tether is leaning so hard into US Treasuries? What if interest rate shifts or fiscal policies start to tighten up?
That's exactly the challenge. The assets in treasuries, while generally considered safe, do expose them to interest rate risks. But then you could argue that the ensuing stability from holding such assets offsets those concerns to some degree. It's like it's like betting on a steady horse in a turbulent race, reliable yet not without its vulnerabilities.
Right, I see what you mean. And when you consider that more than half of their reserves and even strategic investments spill over into areas like AI and data infrastructure, it adds another layer of complexity. They're not just sitting on cash, they're actively driving innovation.
Exactly. Their move into sectors like renewable energy and peer to peer communications suggests they're preparing for a more interconnected digital finance future. It's fascinating to see a stablecoin issuer think beyond just maintaining a peg.
Absolutely, that's forward thinking. Yet, I do have a bit of a critique here. While the strategic investments are promising, isn't there a risk that they might dilute their focus on what matters most? Maintaining stability and trust in the stablecoin?
That's a fair challenge. There's always a balancing act in diversification. For Tether, the key is in ensuring that these investments don't compromise liquidity or the fundamental reserve backing that provides trust. It's a bit like running a marathon while juggling. If one thing drops, the whole performance can be off.
That's a vivid analogy. And what about the user growth? A 46 million increase in wallets is phenomenal. Do you think this user driven expansion is sustainable, especially with regulatory pressures everywhere?
That's the million dollar question, isn't it? On one hand, robust user growth indicates strong market demand and an expanding footprint. On the other, as regulators, the ones in the EU and elsewhere, keep a closer watch, Tether will have to navigate compliance challenges without stifling innovation.
Yeah, it's a tough balance. Speaking of regulations, the regulatory environment around stablecoins is evolving fast. With the EU and Bank of Italy flagging potential systemic issues, how do you see Tether adapting in the near future?
Tether seems to be walking a tightrope. They're boosting operational profits and diversifying investments, but regulators may push for more transparency and stricter reserves management. I think we'll see more frequent audits and perhaps even a shift in asset allocations to mitigate those concerns. It's like preparing for a storm. You have your shelter ready, but if the winds change, you need to adjust quickly.
Definitely. Right, and this really is a microcosm of the broader crypto industry, isn't it? Balancing aggressive growth and innovation while keeping a firm eye on risk management.
Spot on. Tether's performance in Q1 sheds light on how digital assets can operate with huge exposures, yet still yield substantial profits.
Yeah, it's an intricate dance. And let's not forget, the stablecoin market is dominated by these dollar backed tokens. With USDT and USDC covering 87%, any shakeup here could be monumental for the entire space.
Exactly, which is why the potential market cap reaching $2 trillion by 2028 is so fascinating. It speaks to both the growth potential and the systemic significance of these assets.
That's huge. So, if Tether continues on this trajectory with solid operating profits, strategic investments, and robust user growth, do you think they can maintain market trust in face of regulatory and market pressures?
I believe so, as long as they remain transparent and agile. The $1 billion operating profit is evidence of a sound business model, but they'll need to ensure that their risk management keeps pace with their expansion. It's like building a skyscraper. The foundation has to be rock solid even when you're
Yeah,
reaching for the
exactly.
clouds.
I appreciate how they're not just a stablecoin issuer, but are actively shaping their role in the broader digital financial ecosystem. Still, it's a high wire act that requires constant vigilance.
Definitely. The interplay between asset backing, reserve management, and innovative investments is complex. Tether is navigating a space where finance and tech converge, and small miscalculations could have outsized impacts.
Every detail counts. And if the market cap for dollar backed stablecoins really hits $2 trillion by 2028, what do you think that signals for the overall crypto landscape?
It would be a monumental shift, signaling that stablecoins have transcended their niche status to become core components of global finance. It might even prompt incumbent financial institutions to integrate more robust
Right,
digital
that
asset
could blend
offerings.
traditional finance with digital innovation. It all comes down to trust and transparency, doesn't it? With Tether taking these strategic steps, they seem poised to lead, but the regulatory scrutiny will likely keep them on their toes.
Exactly. It's a dynamic situation. As the ecosystem matures, both user trust and regulatory clarity will be the yardsticks for success. Tether's approach with its diversified portfolios and strategic investments might very well set a precedent for others in the
That's a
space.
clear indicator of the future path. And let's not overlook how this ties back to innovation overall. By investing in sectors like AI and renewable energy, Tether is not only shoring up its financials, but also building bridges to the future of tech.
Right, and that future interconnectedness is exactly what keeps the crypto space so exciting. Sure, challenges remain, like regulatory hurdles and market volatility, but the potential for growth and innovation is enormous.
Absolutely, I couldn't agree more. It's been a real deep dive into Tether's Q1 performance. Their numbers, strategy, and reserves all carry implications that reach far beyond just their stablecoins peg.
Indeed. As we watch this unfold, it'll be interesting to see how Tether adapts to shifts in the global financial environment and continues to maintain both profitability and trust.
No doubt about that. Well, here's to an evolving era in crypto where balancing risk and innovation leads the way. Thanks for walking through these insights today.
Thanks, and here's to keeping a keen eye on the next chapter in digital finance.